So this AUDCHF, the Aussie Swiss trade that we took last week, was actually shared in the group. So let me just show you. This is 3rd October, and this was the trade. And then, so from there, and then we had, this is how it has been playing from 3rd until the 9th October. So I just want to take you through the process through which this trade was taken, and then the reasons why we take such trades. So one thing you should also know here, we don't specialize on a particular pair. So we look at all pairs, but then we look for one pattern. That is either a double top, double bottom at a price difference area. So to just take you through the process of taking this trade, I have to open a new broker feed. So let's go with Wanda. So we usually start from the higher time frame, which is the monthly time frame. Sometimes we go to the yearly time frame. There's absolutely nothing. So we have a very interesting price area here. So if you look at this strong bearish candle here, this is what we call our price difference candle, because the difference between this high and this low has actually been here. And this is where we expect a pullback and then to continue down. But then we need to understand that from here, the market came and formed a new low with that wick. And then we also have this wick forming our potential supports in case price pulls back. So from here, then we can go to a lower time frame and begin to understand how price is actually playing out. So you realize that on the bigger picture, we had a strong break to the downside, a pullback, and then a possible retest to continue back downwards. So once we had that, we came to our 4-hourly time frame, the time frame from which we look for trading opportunities. So this is the important price area. The price difference area is where we look at our possible resistance area. But then looking at how price was actually moving here, the moment it touched this, we had a strong break. The market gave us a lower low here. So we had a low and then another lower low. So the moment we got a lower low here, we're like, okay, the next thing is to wait and see whether this area will not be broken. So we had a lower low and then price pulled back into this, and then we had a strong bearish break. So once we had this bearish candle here, that is actually why we had the trade. And like always, stop loss was above the structure there. That is what we always do. So we don't say our stop loss will be 20 pips, will be 30 pips. Our stop loss always depends on the structure the market has given us. So if it has given us a smaller structure, we hide the stop loss above it. If it is a bigger one, it depends. But the risk to reward always remains the same. And then, of course, we had our first target. We wanted our first target to be down here. If you can see, this is the TP1 area was around there. So once we had this, of course, we know we have a bigger target. But then also once the price played out, we had to manage it, take some partial profits, break even, and then let it swing. So this is the reason why we took this trade. We have broken even, taken partial profits. We want to just see how far it can play out to come to these areas and then eventually possibly down there. Now it is pulling back. So the next trade we also took, after this one, we had broken even. We're like, yeah, we've forgotten about this trade. Let's look for another trade. So we landed on this other trade, which was Swiss yen. Now, they are all Swiss pairs here, but remember, we always look for one pattern. So from here, we had actually the trade here, and then played out and then gave us a few pips, about 20 or 30 pips, and then went and hit our stop loss, which was definitely okay. But let me just take you through why we took that trade. Again, using Owanda. So like we always do, we go to the monthly time frame or a higher time frame. So on the higher time frame, we want to understand how price is likely going to play out. So if you look here, you have a strong bearish candle, our price difference. So if you just mark it, we have this area, which we shall look at as an area of interest. So let me just mark it with this, because just to cover up for that. So this is an area in which we are looking for a pullback because of these lows that was created. So we think when price pulls into this area, there is a potential for us to sell off. And then from here, we can come to another lower time frame on the weekly, and then we see how it plays out. That is it. And then maybe possibly to the daily. So on the daily here, you realize our price difference here corresponds to this supply area here. Like I always explain, if you want to study supply, look at when there is a series of one-sided candle, and then there's an opposite candle, that is where your supply area is going to be. So you can see price difference and supply, it's just the same thing. So from here, we're looking for trading opportunities around here. And then when we came to the 4-hourly, so once we begin to see this pattern here, we're like, yeah, we could actually have trading opportunity here because we see this area has not been broken. So one of the mistakes we did is not waiting for lower lows to be formed. This is not quite a lower low because it has not actually violated this. Okay, so those are some of the mistakes you will be making, but then you get to learn. But now we see, so we took this trade then from here after this, and we were targeting these areas here, and then our stop loss was here, and the stop loss has been hit. So those are the two trades I've taken. Now this area is still valid. If we have, we'll see it maybe tomorrow or one of these days. If the market breaks back inside into this is a strong candle, we actually have an opportunity. But that is what happened this week. So let's see how the rest play out. We keep holding on to this trade and see how far it can go. After all, it is already it is a break-free trade. So you want to check them out. I sent it out here a few days ago. So you can always check it out on our page. Okay, this is the trade like 5 days ago. It's here. So 1, 2, 3 for the fourth one. And then we also had it on YouTube. It's also here, the fourth one. So this is how we played out, and you just want to see how you can be able